Welcome to the Black Hole of Real Estate, Episode 5. We're kicking off May 2020 with a pandemic uplifting note, and we're going to be talking today about the market reopening. Some stats from April that were surprisingly good, low interest rates, and at the end, we're going to talk about a little trouble in the commercial industry that maybe need to take a deeper look at. First things first, the governor of Florida got us opened up a little bit more. So they are now looking at things like restaurants to be able to be at 25% capacity. So those of us that have been cooped up for the last month can get out a little bit. And there's this pent up energy, kind of like a really, really long hurricane where we go and shelter for a little bit in a hurricane and we wait and wait and wait till the hurricane's lifted. Then we go get out and we go do stuff. This one just happened the last 30 or so days, and we're not through all of it, but you can tell there's a little more bounce in people's stride right now that they can get out just a little bit more and do a few things. And I know they're excited to reassimilate back into the great state of Florida and all it has to offer. And with that, there is a renewed energy in the real estate market. And, I will tell you that area brokerages, the phones are ringing. People are certainly, being safe about it. And there's plenty of virtual showings go on, but we're starting to experience some people were saying, hey, we like to see the house in person. I think that's great. And I think we'll expect to see that ramping up over the next 30, 60 days. I'm not sure that we're ever going to just leave behind what we've experienced the last couple of months. And I do believe there is a big place for the virtual showing opportunities. So brokerages and agents that are using the technology to their advantage, maybe they've been doing it for years, that's going to continue to play a good sized role in the market as we move forward. Let's face it, some people realize that we can do things virtually and that everything has to be attended. There's a whole new dynamic out there. So it'll be interesting to see, what remains from what we've experienced the last few months as it pertains to regular real estate, if you will. So with the market being open, a couple of things that are really, really interesting. There is this sentiment from a portion of the industry where prices, they may drop and there might be some opportunities a couple of months down the road. And if you're holding off in the hopes of that low price appearing 30, 60, 90 days down the road, you get that great deal, I'm not sure it's going to get there. And here's what I mean by that. We have super low inventory right now. And if anything we need right now is for some sellers to open up their thought process on how they might get their home on the market, whether it's their virtual showings or maybe the home is vacant, maybe it's a vacation property they're not using or an Airbnb where the ROI has been compromised. The market absolutely screaming for some fresh inventory, so it's super low right now. We just got notification all-time lows for interest rates happened yesterday. So when you combine low inventory and super low rates, that's going to make purchasing power increase just a little bit, whether or not prices go up or down. The inventory is going to make that scarcity, even if there's less buyers, there's less inventory. But what we see right now is that buyers are creeping back in, sticking their toe in the water, and say, hey, look at, rates are low, I can still pay this price, still get a great monthly payment and have this home for the next 30 years, or be aggressive and take a 15-year mortgage because the rates are so low and pay the thing down. So there's a lot of wealth building opportunity that might just be occurring before our very eyes. And let's keep in mind, in 2008, when the bottom absolutely fell out, it was a different market. There was a ton of inventory. There was over a year's supply of houses available and no buyers. Rates were more than double what they are right now. And there was no equity in the property because the bottom absolutely did fall out. So that seller was really over the proverbial barrel, so to speak. And there was no equity to be had. There was no buyers out there. Rates were high, and there was no place for them to go. And when you're losing your house, and it's a short sale or a foreclosure, a lot of keys are being thrown on the counter, and it's different. What we are experiencing right now is rates are low. The sellers have equity. They don't have to sell. If they bought in the last 5 years, they've got probably a very low interest rate, so the payments are affordable. They do have the option to continue to own the property, live in it, or just rent it out and not have to sell it. So there's not a huge push on the inventory side other than a move up buyer that would like to get a little bit more house, or maybe in this case, a little less house. Anybody who's been cleaning a 5-bedroom house and there's only 2 people living there probably is questioning, do I really need this much space? And in contrast, if there was a family of 4, 5, 6 people in a 3-bedroom house, they're probably thinking, we need to do something, give us a little bit more space. So I think there's going to be this wave, if you will, where the inventory might swell up a little bit, but then the buyers will come in and they'll buy it down, and then we might get a few more pieces of inventory out there and a few more buyers coming in. I think you're going to ride this wave up and down for the next several months. I don't see the buyers or sellers being positioned as dominant in this market. I believe there will be the proverbial give and take. I think it certainly looks like a balanced market that we're walking into right now. So if you're a seller, I can't think of a better time to be putting the property on the market if it makes sense and you're comfortable doing that, because there's buyers out there and the rates are low and they are ready. I mean, there's pent up demand from the last 30 days. Now, if you're a buyer, some of these sellers realize that they have to sell, and they might, on a case by case basis, take a little bit less than they might have gotten a few months ago because of a different financial situation or just a desire to no longer own the house. That certainly could happen. But I don't see a huge run up in prices. So if I was a seller, I would not be overconfident, even with the low rates out there and pent up buyer demand. And if I was a buyer, I probably wouldn't be holding on too long for that amazing deal where a $200,000 home is going for 100. I don't see that at all. Could one go for 190 or 195 based on a case by case basis as someone feeling some pressure financially to get it sold? Absolutely. But I can tell you that we're right now in a multiple offer situation. Not one of our clients is, and of course they're hoping and wanting, and I support this, to get a lower price and maybe some closing costs put into the mix. Within 2 days, there was multiple offers on the table, and we had the proverbial bidding war going on in this property. So it's going to be some of each, and I believe that more than ever, you need a consultant that's going to help you in the real estate piece. And if you fulfill that on your own and you have that ability, perfect. But I think we're looking at consultative summers is what I would call it right now, to make sure that we're making the right buy that we're not going to regret and selling for a price that makes sense right now. That's the market that we're looking at right now. I don't know that we're going to see drastic changes in pricing. I think we'll see changes in behavior in the way properties are shown and sold. Uh, these low interest rates, historical lows, it's really interesting just to watch. When I'm seeing low threes, across the board. This is just on the heels, if you will, of just a couple of months ago, this giant refi boom where the rates were so low, everybody jumped right back in. And of course, we have the PPP loans and economic disaster loans to the SBA that are also kicked in. It's a little surprising almost that there's that low of an interest rate, because that will spur activity. And you would believe right now that the mortgage companies would be up to their ears in loans to process, but apparently there's still demand out there. They're still looking for more business. If you do see rates go up a little bit, it may not be the cost of money, it may be the ability to process all those loans and get them closed. So this is something we definitely want to keep an eye on. Are these low interest rates an aberration just for a week, or could they go even lower next month? It's wide open right now. The PPP loans are certainly helping a number of people with regard to being able to keep their businesses going a little bit longer. And while things are opening up, let's face it, if you're in a business such as a restaurant, it might take you several days to get ramped up and clean and fully stocked for food and supplies and get your staff back on. And right now, I'll be honest with you, some people are probably making more money on unemployment than they might at any job they might have. So there is a little resistance for some people to actually want to go back to work, just because economically they're better off staying home. It's a real strange thing to be walking through right now, to be able to make more money staying home than going to work. And I'm aware of some employers that got a PPP loan and their staff was a little upset with them. Like, you're forcing us to go back to work, and they want to think of it as a pay cut. Well, unemployment's temporary. I don't know that I would resist going back to work, even though it's tempting because you're making more money staying home. Long term, that probably isn't a good business philosophy, but it's real and it's happening. And why do I bring this up? because it's absolutely affecting the way that people will be buying their homes. If you're in some sort of a mortgage forbearance right now, you've probably taken yourself out of the market for the next year, and that's okay. The big 6 months of delay payments coming due in, let's say, November, December around the holidays. If your payment's $1,000 a month and you're being deferred for 6 months, I would expect a $7,000 mortgage payment to be made in November, December. We hope that doesn't get ugly, but potentially that could create some real deficit situations, some possible foreclosures. But it's a really small segment of the market. I believe it's less than 10% are in the forbearance program right now, but it does bear watching. That is absolutely sure. With the unsure futures of some businesses, the collateral damage is this: if you are working for an employer that has you on some sort of a furlough, and they can't check the box on the verification from the employer that your employment is likely to be continued, that could affect some abilities to qualify. So if you deferred your mortgage payment, that can impact your ability to purchase in the next 6 or 12 months. If your employer has had you on a forbearance or an unemployment situation, that would also be looked at. I would just say, hey, keep your credit good. Do the best that you can with the situation. If you're thinking of moving in the next year, really dig deep with a solid lender and have that consultative conversation just to be sure that it's not going to interrupt the purchase that you might want to make. The last thing, and this is, I don't want to use the word scary right now, but a concern, absolutely. Commercial real estate is at a bit of a crossroads right now. I am familiar with, perhaps even half the deals that were out there that were on the table have disappeared. The buyers have backed off, and the sellers are left holding the bag on this one. I heard the other day that somebody walked on a $200,000 deposit, just walked away, not completing the deal. I'm not sure about you, but 200 grand is a lot of money to me, and to walk away from that kind of money, that's very telling of what might be going on in commercial space. Retail as we know it has gone through a change I don't think it's going to come back from. We've got huge malls right now that they're trying to restart and reopen, but how long can a business that's been closed down that long sustain itself trying to ramp back up and get the public confidence and trust to be walking the malls again? So commercial space could be on sale at some point. And how do those spaces convert? I mean, think of a mall or a strip plaza. Will that continue to be retail space? What does it convert to? I don't know that it does convert to something. So if the commercial market, if anything, I would say there's possibly a window of opportunity. And if you have commercial property right now and you are attempting to sell it, my heart goes out to you because I'm not sure where that next buyer is coming from. There's so much uncertainty in the business world right now it seems like a big problem waiting to happen. If there's a weakness in this market, I think it's the commercial industry. And if you're thinking of starting a business right now, what does it look like? Most businesses have been running remotely for the last 30 days. So do you need that huge commercial space? Are we going to find that big spaces become little spaces? It was only 6, 8 months ago when I was looking at space, it was extremely hard to find anything under 1,200 square feet. Everything was 2, 3, 4,000 square feet. And, I didn't have a need for that much space personally. And I'm wondering, do we start to see those big 2 and 3, 4,000 square foot spaces? Do they get subdivided for smaller, more flexible businesses that work remotely? There could be just a conversion, and maybe for the owners of commercial property developers, it's redefining the space requirements of business going forward versus what the expectation was in the past. It's going to be really interesting to see what happens, and I believe the commercial industry they'll adapt. And I think in the wave of what might happen with pricing and availability, you may just see these parcels get divided up a little bit smaller square footages, more accessible, more business centers. Let's face it, if you can have a centralized desk for a group of businesses and maybe they're sharing, maybe 10 or 15 businesses are sharing 10,000 square feet and they all have offices as opposed to one company with, 100 offices, maybe it's 10 companies and they have, a couple rooms each. So I believe the space might just get redefined, and that might be the savior for the commercial market if we're going to proceed as if we are just always going to have those huge spaces taken up by businesses, that might be a step in the wrong direction. So this really bears watching. And hey, I could be way off base over here, but right now I see a lot of struggle in the commercial industry, and I don't know where and who is going to fill up those spaces. So if I was to say anything right now, hey, we are open for business the month of May. We're super optimistic where this market is going to. There's an energy, and all the dominoes are lined up. Some inventory coming on, super low interest rates, and pent up demand. May closings may be a little bit off across the board, but I think June and July they may come back just roaring in. So great look at the market right now. If you have questions about real estate, drop us a line, let us know. We'd love to hear from you. And hey, look forward to talking with you guys next week.